Starting off with economy today. Now, as I keep telling, as I again reiterate, when you look at prelims exam, there are three subjects which are non-negotiable. When I say they are non-negotiable, what does that mean? That simply means you cannot afford to be weak in those subjects, that is polity, economy, and geography. What is the logical basis behind that you will have to be strong with respect to your polity, economy, or geography? These are the areas which are mostly certain because most of them could be answered using knowledge. Rest of the base is going to be away from the knowledge. When I say away from the knowledge, it simply means that I will have to use more of my jugad eliminations when it comes to other subjects. But when you look at these three subjects, somewhere I see that there is an acquaintance that is existing when I look at questions. That is one fundamental logic that you'll have to remember, that these have to be strong at any cost. The second reason why these have to be strong at any cost is the proportion of the questions that are seen to be coming from this, because approximately here we have 18 to 20, here again 18 to 20. Sometimes we can also go up to 18 to 20. Now, if I have to put a limit on a lower end to this, approximately 50 questions of my paper is going to be coming from these three, right? So in that context, any given day you will have to remember that weak economy will not allow you to qualify prelims. And when I say weak economy will majorly be centered around what? 1, concepts, 2, data, 3, application. Now, when I say data, I'm being very specific again here. That is fundamentally dealing with what? Trends across various aspects of economy. Now, one major problem that you would any given day face in the answering of these questions of trends is most of the times these are current affairs, and most of the times these are unknown. I will tell you how to handle that as we proceed, because when you look at any structure of HIR class, you would see when the subject begins, we would look at what are the hotspots in the beginning, and then we would look at a bunch of generalizations, and then I would get into the subject, right? So that is the general approach that we follow in any class and any subject of HIR. So when I look at the second part of it, data, trends, current affairs, unknown component is going to be more from this aspect. What is going to be easy in the context of economy is concepts and application. And most of the times, remember, in application, it is going to be what? The relation with respect to what is the cause, what is the effect. For example, some concepts like inflation, some concepts like forex, some concepts with respect to repo rate, reverse repo rate, credit management. All of those aspects that you come across here is with respect to what? Cause and effect, and most of the times that happens to be what? Based on application, right? So when you look at economy as such, I would say you can never miss these set, and this we would see how to tackle those. Now, in general, when you look at the hotspots with respect to economy, you would always have a question on the basic understanding of supply and demand. Now, one small disclaimer that I keep telling, in fact, I would not tell this disclaimer to any other subject except economy. Whatever is your academic economy is very different from whatever we are learning for exam, right? You might be a graduate of MBA, you might be a graduate of MA economics, you might be PhD in economics, doesn't matter to me. What is going to be more important to me is getting a question right in the exam. And when I say getting a question right in the exam, I am being very clear. What is your academic economics is very different from exam economics, right? And for me, in exam economics, what is going to matter is what is the cause, what is the effect. That I would keep reiterating as we proceed, right? So one area that is important is the aspects of supply and demand. The second area that you see, which is quite oftenly asked, is definitely you will see this organization in your question paper every year, RBI. The third area which they keep alternating most of the times is sometimes upon inflation, sometimes upon foreign exchange. Now, I don't say there is a regular question existing on them, but alternatingly, we would see questions coming with respect to inflation, forex, these dimensions. Another area where you see the question is from the aspects of fiscal policy, right? Fiscal policy, and to be very, very specific, from the concepts of money. When I say concepts of money, every year you see one or the other question coming from money. And when I say fiscal policy, I am being very, very clear here with respect to deficits, right? Now, last year there was a surprise element. They suddenly asked you calculations of deficit. Not one question, in fact, we had two questions, right? Now, again, you need not be of an assumption that you're going to have those calculations again. That is not necessary, but we will have to be ready with respect to what is going on, what is included in each of the deficit. When you look at money, mostly it is with respect to the dynamics of money. When I say dynamics of money, it could be either a question on money multiplier, or either a question on velocity of the money, or it could be either a question on speculative demand, transactive demand of the money, or it could be a question on money multiplier. We would see that bunch of information is required in the context of understandings of money that we would see. Another important area is international organizations. In this, majorly WTO, IMF, World Bank, right? I would give you a bunch of generalizations to tackle these questions because every year we have one question. The hotspot was WTO. After 2019, we don't find a question on WTO to a larger extent, and we see questions coming on IMF and World Bank. Last year, we had a question on World Bank. If you remember that, the second statement of that particular question says that it single-handedly eradicates poverty. Something like that was there, right? And depending upon that, you could eliminate that particular statement. So that is one more area. And other aspects with respect to this is in sectors. Any given day it is agriculture, and any given day the questions related to MSP, right? Questions related to MSP is one hotspot that is there, but otherwise most of the agriculture will converge with the agriculture of geography. You don't see much of economic geography, economic aspects of agriculture coming because that is anyway dominant in means examination. But in the context of prelims examination, one sector which is important and one dimension of agriculture which is important is MSP, but the other aspect is what? Geographical dominance will always exist, especially with respect to agricultural operations which are present, right? Then another area which is definitely important is something which is very random. Now, why do I want to keep this random as important dimension? Because economy and environment are two subjects which have dominance of random questions. Because whenever they ask you some question on polity, at least you know what is going on. But suddenly, I remember, I think in 2022, suddenly they popped up a word called as which of the following are the real sector, right? Or which of the following is non-financial debt? Now, what happens is there are certain troubling areas in this subject. So, what I would tell you how to handle those questions again will depend upon bunch of generalizations that we are going to keep for economy. right? So these are the various hotspots which are present with respect to economy, and the composition of economy in your paper is around 18 questions. You go back and see, most of us feel that paper is dominated by polity, but paper is every year dominated by economy. That is a surprising element, and the range is approximately around 18 questions, right? Definitely not less than 15, right? Definitely not less than 15. It is always above 15. It can go up to 18. And I think in middle 1 year, it has gone up to 24 questions from economy. Now just imagine 24 questions from economy and 25 questions from environment. 50% of the paper, you have two E's which are covered, that is economy and environment, right? So that is the basic dynamic which is present with respect to economy. The next aspect is with respect to generalizations of economy. Right. The first cluster of generalizations in economy is generalizations regarding general terms. Write down. First, anything that is real, anything that is real in economy, anything that is real in economy is adjusted to inflation, is adjusted to inflation. Two, second, anything that is indexed, anything that is indexed is adjusted to inflation. Anything that is indexed is adjusted to inflation. Next, anything that is elastic, anything that is elastic is known to have a relative change, is known to have a relative change. Next, anything that is marginal, anything that is marginal has a respective change, has a respective change. Next, anything that is net, anything that is net is adjusted to depreciation, is adjusted to depreciation. Next, anything that is revenue or money, anything that is revenue or money is short term, is short term. Anything that is capital, anything that is capital is long term, anything that is capital is long term. Next, anything that is gilt, anything that is gilt is related to government, is related to government. Anything that is constant, anything that is constant is adjusted to inflation. Anything that is constant is adjusted to inflation. Next. Next set of generalizations regarding Indian economy. Next set of generalizations regarding Indian economy. I don't. Everything in economy is dependent upon supply and demand of both related and unrelated sectors of Indian economy. Next, in Indian economy, there is a competition between money and financial instruments. There's a competition between money and financial instruments, comma, public and private. Competition between money and financial instruments, comma, public and private. Next, most of the sectors in Indian economy. Next point, most of the sectors in Indian economy are market driven. But some sectors are still regulated. Under that, you write down one list. First one is prices of urea. Next, prices of petrol and diesel. Next, atomic mineral extraction and usage. Next, railways, defense and telecom spectrum. Next, banking and exchange rates. Right. Next, generalization on financial markets. You see, this particular topic has been on a recent dominance, right? Now, prior to 2019, we hardly had any questions on financial markets. But from 2022 onwards till 2025, you will definitely see at least 2 to 4 questions. Right? All of those bonds, shares, equity market, debt market, right? Different terms, ETFs, right? We would come across that. Almost we will have one whole session on financial markets. Okay? Right now. Anything that is risky, anything that is risky is rewarding in nature. Anything that is risky is rewarding in nature. Next. Anything that is flexible, anything that is flexible or convertible, anything that is flexible or convertible is less rewarding, is less rewarding. Next. Anything that is market related, anything that is market related is flexible, free, is flexible, free, liberal, self-controlling, and self-correcting, Next. Anything that is related to money, anything that is related to money and short term, is risky, comma liquid, is risky, comma liquid, and fast changing, Next. Anything related to capital and long term, capital comma equity, you put it. Anything related to capital comma equity and long term is slow, comma comparatively safer, comma comparatively safer, but can also be dynamic, in bracket market condition, Next. The financial markets in India, are still evolving and nascent, in bracket you write, large potential to progress, Next. Most of the aspects related to financial markets, are regulated by SEBI, in bracket you write not RBI, Next. always go with the simplest option. Always go with the simplest option. If the financial instrument asked is new, if the financial instrument asked is new, and also eliminate the most common options, and also eliminate the most common options. Next generalization. Sectors. I don't. Agriculture is never consistent. Agriculture is never consistent, steady. Agriculture is never consistent, steady, uniform, steady, uniform, rapid. In bracket you write majorly rain-fed agriculture in India. Majorly rain-fed agriculture in India. Next. Anything regarding industrial sector. Anything regarding industrial sector is stagnant, slow, slow. Anything that is regarding industrial sector is stagnant, slow. But if it is an option indicating progress, it is mostly correct. In bracket you write shift from capital intensive to labor intensive industrialization. Capital intensive to labor intensive industrialization. Next. The statements regarding service sector. Are mostly correct. In bracket you write progressing sector. Next. The trends in the sectors. Is never steady, uniform, consistent, never uniform, consistent. in bracket you write, nothing is impossible. Nothing is impossible. Next. Doubling the growth rate of any sector. Doubling the growth rate of any sector. Next point. Doubling the growth rate of any sector is never easy in India. Is never easy in India. And it is never short term. And it is never short term. Right? Now, please understand one small thing here. Whenever we are talking about trends, right, there are 2-3 ways of asking a statement regarding trends. Sometimes they say the rate of change, and sometimes they talk about the absolute or overall change. Now, when I say rate of change, this has a parameter with respect to what? Time. Right? Generally, this is talking about what? Productivity of any sector per se. Right? And when you look at this absolute or overall change, this is just talking about some aspects like production. And this is more absolute, and there is no factor of time that is existing. Now, whenever they are trying to question, you see that the absolute or overall change which is existing with respect to a particular sector can be more consistent than this. I say that overall change is more consistent than the rate of change. Overall change is more consistent than rate of change. When I say that it is going to be more consistent than rate of change, it is extremely difficult for us to ensure a consistent rate of change. That is what I mean. Right? They say the GDP growth rate has been steadily increasing. I don't think so. Right? But the overall GDP has been steadily increasing. Yes. Right? I see there is more probability of absolute numbers changing steadily than rate of change. Right? So that is one factor that you would always have to remember in the context of trends. Because every year we will have at least one statement coming up from trends. That will be there. Okay. Next, international sector. Don't worry, I would tell you how to apply all of these generalizations when we are actually solving PYQs. Now, what is the essence of all of these generalizations? To handle those questions which are very random. Right? Because most of the times in economy, I told you they can be random. Suddenly, there was a question on Vietnam. I think that was a question in 22. In 2022, we had a question on Vietnam economy. In 2020, we had a question on South Asian economy, Sri Lankan economy. Right? Now, one fundamental understanding is understanding Indian economy itself is a big deal. Now, you start studying Vietnam, you start studying Bangladesh. There is no point in studying Bangladesh today. Right? Once upon a time, yes, definitely they were growing with double digit, but today it is all gone. Okay? So, international economics, most of the times, India's international contribution, is restricted to 2%. In bracket you write 2% rule. 2% rule. Next. Next. Anything related to Western economies. Anything related to Western economies are generally observed to be progressive. Are generally observed to be progressive. Next. Anything related to European economies. Anything related to European economies are generally sustainable. Are generally sustainable and development oriented. And development oriented. In bracket you write some countries are performing poor. Some countries are performing poor. Next. Anything regarding Asian economies. Anything regarding Asian economies is still growing and nascent. Is still growing and nascent. In bracket you write India and China are dominant. India and China are dominant. Next. Anything regarding international organizations. Anything regarding international organizations are mostly facilitating rather than regulating. Are mostly facilitating rather than regulating. Most of the aspects of international economics, last point. Most of the aspects of international economics are dependent upon supply and demand. Are dependent upon supply and demand. In bracket, even exchange rates. In bracket, even exchange rates. Next, last point, add one more. Any change in the global economies. Any change in the global economies can definitely impact. Any change in the global economies can definitely impact other economies. Other economies and Indian economy. Other economies and Indian economy. In bracket you write globalization. Is this clear? Can somebody tell me the count? How many? 32, right? We had around 32 generalizations for economy, and take it for granted, my dear, with these 32 generalizations, you can eliminate at least 10 to 15 statements of economy any given day, right? These are tested, these are used repeatedly. Okay? So keep that in mind. Now we'll get into the subject, right? See, first, in general, we would talk about the general aspects of economy, then I would get into accounting, then I would get into money, types of money, dynamics of money, right? Then I would get into banking. Sorry, before money, I would talk about aspects of supply and demand, right? Especially the growth inflation curve, what are the dynamics that are going on, how to observe your aggregate demand, aggregate supply, what is being affected, how to use those in solving inflation questions. I would deal with that in specific, supply and demand. Then I would get into banking, then some aspects of fiscal policy, especially taxation. Then we would get into international economics. And the last class of economy, we would majorly deal with financial markets, right? That would be extensive and that would be extremely important in solving any question of financial markets, right? That will be taken care, and this is what we are going to cover in the context of economy. Okay? Now, when I look at any economic system, you see, it can be either centralized or either it is market driven. It could be either centralized or market driven, right? Under centralized economic systems, right? Under that, government is regulator. Government is regulator, comma, indulges in business. Indulges in business. Next, planning is the central activity. Planning is the central activity. Dominance of public sector. Dominance of public sector. Major role of government. Major role of government. Next, under market driven, dominance of market forces. Dominance of market forces. How many market forces are there? Only two, supply and demand, right? Usme there is no point to think. Okay? So dominance of market forces. Next, element of competition exists. Element of competition exists. Balance of private and public sector. Balance of private and public sector. Liberal policy making. Liberal policy making. Next, right? So this is with respect to the types of economic systems which are existing. Now, when you look at the nature of Indian economy, it is what? Mixed. The Indian economic system is mixed. When we say it is mixed, an element of capitalism and socialism, an element of public and private, an element of government plus market, an element of public plus private, government plus market, And more importantly, you see an element of profit plus welfare. Profit plus welfare. You see, it also has an element of inequality. It also has an element of inequality. Definitely combination of inefficiency. It has a combination of inequality and inefficiency. And more importantly, the limited involvement of government, the limited involvement of government, and it also has a combination of real sector and financial sector. It has a combination of real sector and financial sector. And you also see it has a combination of domestic and international factors. It has a combination of domestic as well as international factors. Right? Now, this is the general overall understanding of Indian economy as such, again, in the context of it being mixed. Right? Next. When you look at sectors of economy in general, one kind of classification is depending upon the activity that is performed, and in that you see primary, secondary and tertiary. When you look at primary sector, it is majorly dealing with raw materials. When you look at secondary sector, it is majorly dealing with processing, production and production. In tertiary sector, it is majorly dealing with services. It is majorly dealing with distribution. It is majorly dealing with services and distribution. Now, mostly which is technology intensive, if you see, if you move across these sectors, if you move from tertiary to primary, the extent of usage of technology is seen to be decreasing comparatively. The extent of usage of technology is seen to be decreasing comparatively. You also see the potential of growth is seen to be decreasing. The potential of growth is seen to be decreasing. The economic contributions is again seen to be decreasing. The economic contribution is seen to be decreasing. But the element of workforce is seen to be increasing. But the element of workforce is seen to be increasing across these sectors. Now, again, these are general trends. Now, don't specifically come and tell one is 21.7, sir. One is 18.5, sir. What should I do? Right? Don't do anything. Just follow this particular trend. Okay, so workforce, potential of growth, technology, economic contributions. Right? And where is more international influence? Obviously, the international influence decreases. The international influence decreases. Right? And the element of urbanized dimension also decreases. Right? Be very clear with respect to all of these trends, because in 24 we had one simple question. In 2015 we had one simple question. In 2019 we had one simple question. They were asking certain sectors and they were asking certain activities and asking you to match. Now, In that you cannot go wrong, because these are some of the very, very basic questions, right? Apart from this, depending upon what is the role, also you have two sectors which are dependent. One is the real sector, the other one is the financial sector. Just write down certain things regarding them. Under real sector, you write it is that contributes to the economic output. It is that contributes to the economic output. Next, essential for the progress of GDP. Essential for the progress of GDP. Next, it is important. It is important for productive capability. For productive capability to meet aggregate demand. To meet aggregate demand. It involves direct production. It involves direct production. Activities like agriculture, mining, manufacturing. Activities like agriculture, mining, manufacturing, construction, transport, etc. Next, mostly tangible outputs. Mostly tangible outputs. Next, financial sector. Under financial sector, you write that provides financial services. That provides financial services to commercial and retail customers. To commercial and retail customers. It broadly includes it broadly includes banks, investment companies, insurance companies, and real estate firms. Real estate firms. Activities like banking, stock trading, investment management, Next, it supports real sector through funding. It supports real sector through funding. Next, it is important for efficient resource allocation. It is important for efficient resource allocation and a strong linkage with real sector. And a strong linkage with real sector. Right? Now, simple understanding is what? One is dealing with something which is tangible. The other one is something which is dealing with intangible aspects. One. The second aspect is one is dealing with something which is direct. And the other one is dealing with something which is indirect. Something which is behind the scene is your financial sector. And something which is on ground with respect to contribution to the economy and GDP is real sector. Basic understanding. Okay. Next. Stock versus flow. Stock versus flow. Stock you write down. Measured at a particular point of time. Measured at a particular point of time. Represents accumulations. Represents accumulations. Next. All changes to stock. All changes to stock occurs via flow. Occurs via flow. Next point. Inventory is a stock variable. Inventory is a stock variable. As it is measured at a specific point of time. As it is measured at a specific point of time. Next, flow. It is measured over a period of time. It is measured over a period of time. It indicates the movement or change over time. It indicates the movement or change over time. Next, income, production. Income, production, investment, and consumption. Are flow variables. Right? Go to previous stock. Right? Stock you write down. I gave you one example, that is inventory. Inventory, wealth. Inventory, wealth, capital, capital, population, population are stock variables. Are stock variables. Next. Do they have anything related to tangible, intangible aspects? Or both stock and flow can be both tangible and intangible? Both. Now please be very clear, my dear. When we look at any asset again, it can be what? Tangible, intangible. When we look at any asset again, asset can also be tangible and intangible. Asset can also be movable, immovable. And tangible is what? Something which is physical. Intangible is what? Something which is abstract. It is not physical. Now don't get confused. Both of these can be part of your stock and flow. Right? Now when I say inventory is tangible or intangible? Tangible. List of inventory? Intangible. Change in inventory? Tangible. But you please understand, inventory is stock variable. Change in inventory is flow variable. List of inventory is intangible. Be very clear. Because most of us are not very clear what is inventory. Inventory is what? Inventory is what? Forget about that, my dear. Now, for suppose say you have a shop running, right? You're selling pens, right? You have 100 pens in the stock, and that is at a particular point of time. This was on Jan 1st for sale. On December 31st, you saw there are only 20 pens remaining. This is understood as what? Inventory. This is understood as what? Inventory. But what is this? Change in inventory. Inventory at this point is stock. Inventory at this point is stock. But inventory here is what? Flow. And when I say flow, what does that mean? That means it is changing. It is changing. Anything that is changing, because I see over a period of time, I call that dimension as what? Flow. But at a particular point of time, what am I calling it as? Stock. Be very, very clear. You look at 2023 question paper. You look at 2020 question paper. UPSC was left and right playing on tangible, intangible, stock, flow. What is the basic difference? At a specific point, it is stock. Right? Now, today regarding economy, you have one particular knowledge. That is what? Stock. What is going to happen after 25th of January is going to be a flow. Why? Some addition will happen, some change will take place. Are you understanding this dimension, right? So that is once more understanding with respect to stock and flow. In that example of what? I'm having a list of pens. What all pens I have? Pen is tangible, list is not tangible. Now you coming and giving me letter. Is it tangible representation or intangible representation? Tangible representation. You sending me mail. Please understand that. It is intangible. Huh? It can be considered as data. On data. Simple. Right? List, data, combination, composition, all of this is what? Intangible. Right? Na daggara inni unnai. Intangible. Ivu unnai. Is what? Tangible. Right? Be very clear. Right? In that, I don't think there is any point of confusion. Now, one particular curve which has been very relevant in last 2-3 years of Indian economy is production possibility curve. Just write down. Although towards the end of economy, we'll discuss around 6 types of curves. Laffer, right? We have 6 types. Well, I'll tell you there. Production possibility curve. Right down. It is the possible combination. It is the possible combination of two goods. It's a possible combination of two goods that can be produced. That can be produced with fixed resource and technology. With fixed resource and technology. Next, it indicates scarcity, trade-off, and opportunity cost. It indicates a scarcity, trade-off, and opportunity cost. Now, what is scarcity? Shortage of resources is scarcity. Yes. What is trade-off? Trade-off is like, if I do this, I cannot do that. Or if I give you this, you give me something back in return. Now, don't call this as barter. No. Trade-off is all about what? I am fundamentally doing something for something else. Right? Now, there is a third concept, which is opportunity cost. What is opportunity cost? Value of the next best. Forget about that. All of us are bearing the opportunity cost by preparing for civil services. Why? We have left one opportunity and we're sitting in the class at morning 6 o'clock and studying and preparing for UPSC. That is what? That is opportunity cost. ठीक है, एक line लिख लो. Opportunity cost, एक line लिख लो. It is the cost or benefit. Opportunity cost, it is the cost or benefit forgone when a decision is taken. It is a cost or benefit forgone when a decision is taken. Right? Now continue with production possibility curve. It also indicates the maximum production capabilities of an economy. The maximum production capability of an economy at a given point of time. At a given point of time. Yes. Now, why this has become very, very important to a larger extent is we are majorly talking about the concept of sustainability. And not only the concept of sustainability, but we also see the concept of resource deficit existing in the context of India. Now, when my production system is operating on limited opportunities that are present, I will have to look at whether there is possibility of production or not. Now, you tell me, do we have the possibility of production of lithium-ion batteries? Please understand. Do we have the possibility of production of lithium ion batteries? No. Where is lithium? Unda ni daggara. Amari. Are you understanding this, right? What is the problem that I cannot find a optimized solution in production of lithium ion battery because I don't have resources of lithium. Now don't come up and tell, sir, we found the lithium resources in Kashmir, we found the lithium resources in Karnataka. Fantastic. When you find a resource, the ultimate point is, are they extractable? Are you understanding this, right? So that is what is looked into with respect to production possibility curve. And if you just generally look at what is the nature of this curve, the nature of the curve is generally downward sloping. And what does this indicate here when it is downward sloping? Generally, we take three different cases in any production possibility curve. One particular case is which is within the curve. Now, when I say it is within the curve, it is talking about inefficiency where in production. That means, what is this curve indicating, my dear? The curve is indicating the maximum capacity. Am I overutilizing or underutilizing? Underutilizing the capacity, so that is why I am considering what? Inefficiency. Now, when the production capacity or when the production pattern is seen to be on the curve, you see that this happens to be the most efficient condition of production. When I say efficient condition of production, what is happening? I see my resources and technology are favoring my production. But if something is beyond, right? If something is beyond here, it is unattainable. I could never produce of that particular capacity. Why is this unattainable? It is beyond the capacities. Now, where can you position lithium ion battery? Beyond capacities. And what are the capacities? What are the capacities that I am considering to a larger extent? One is resource, the other one is technology. Now, when I say resource, be very clear, it could be mineral resource, it could be human resource also, right? And that point has to be taken here. Okay? So it could be resources, it could be technology. And I was talking about one particular word with you called as trade-off. When would this condition of trade-off happen? For suppose say, I am saying there is a trade-off between X and Y. What does that mean? It means I can produce more X. If I am producing more X, I will definitely have to produce less Y. Then I can say X and Y are at trade-off. Are you understanding? That means, can I choose both or I will have to choose only one? Only one. There is a clear-cut choice which has to be made in the context of trade-off. And most of the times, this condition will indicate trade-off. Most of the times that condition indicates trade-off. Now that means if you have a wrong choice, what happens? Automatically what is going to come into the picture? Inefficiencies. Automatically you're going to have inefficiencies if you have a wrong choice, and that is where I talk about trade-off. Now when am I going to see it is going to be beyond my capacities? This condition is indicating very high opportunity cost. Babu, you cannot be ignorant about all of these words. Now, when you go back and refer to PYQs, you will know why am I constantly using all of these words, right? May not be such that in mainstream understanding of economics, you would not have come across this, but UPSC plays upon this because these are some common terminologies, right? In that condition, we see large opportunity cost. Here we see large trade-off that is existing. So production possibility curve is talking about where is an optimized production, where is an efficient production that is happening in a particular economy. Where do you think iron and steel in the context of India? We are definitely on the curve. Yes, you see India moving up to second place. Like with respect to production, once upon a time we were 8th, then we moved to 6th, then 5th, then 4th, then 3rd. What does that mean? We are fundamentally what? Maximum efficient, right? So that is one more takeaway that you need to remember in the context of basic economy here. Yes.
Sir, in both opportunity cost and trade-off, we are choosing one and leaving one. What is the basic difference between trade-off and opportunity?
Where?
Trade-off and opportunity.
Here we are doing little bit of what we are leaving in trade-off. In opportunity cost, we are doing only one, and we are completely leaving other. That is the basic difference between trade-off and opportunity cost. Okay. Next, your favorite part, accounting. Write down. Nominal GDP. Nominal GDP. Another you write. GDP at current prices. GDP at current prices. GDP at current prices. Next, total market value. Total market value of all final goods and services. Of all final goods and services. Next, it focuses on value. It focuses on value. In bracket, both price and output. Both price and output. Next, nominal GDP changes. Nominal GDP changes with changes in price and output. With changes in price and output. Next, real GDP. Real GDP. GDP at constant prices. GDP at constant prices. Next, goods and services. Goods and services produced are valued at. Goods and services produced are valued at base year prices. Are valued at base year prices. Next, it focuses solely on the output. It focuses solely on the output. In bracket, quantities. In bracket, quantities. Used to represent. Next, used to represent change in GDP over a period of time. Used to represent change in GDP over a period of time. Next, GDP deflator. GDP deflator. And now measures price change. measures price change. Next, considers the inflation in a particular reference period. Considers the inflation in a particular reference period. Do not have a fixed basket of goods and services. Do not have a fixed basket of goods and services. Next, more comprehensive than. More comprehensive than. WPI and CPI. More comprehensive than WPI and CPI for inflation measurement. For inflation measurement. Next, it includes the inflation regarding. It includes the inflation regarding the goods that are domestically produced. The goods that are domestically produced. In bracket doesn't include imports and exports. Doesn't include imports and exports. Next, basic GDP is what? Mostly domestic and within the territory. GNP is what? Something dealing with nationality. Something dealing with nationality. It can be both within as well as outside. It can be both within as well as outside. And what is GNP? GDP plus net factor income from abroad. Now, when we look at net factor income from abroad, it is fundamentally talking about Indians in foreign minus foreigners in India. Net factor income from abroad, Indians in foreign minus foreigners in India. That is what is giving you something called as net factor income from abroad, right? And always remember, if I say GNP is more than GDP, is it always right? It is not always. Can it be more? Yes. Can it be less? Yes. If NFIA becomes negative, what is going to happen? Definitely GNP is going to go less than GDP. Right? So it is not always, this condition is not always relevant. It could be such that GNP is greater than GDP or GDP is greater than GNP. Can. Right? Next. If you remember, I had dictated one generalization that anything that is net is what? Gross minus depreciation. Now you tell me something. Is depreciation related to something which is tangible, or is it both tangible and intangible? Both. Tell me an example for depreciation over intangible aspects. Stock prices going down. Is that depreciation? Huh? Is that tangible or intangible? Tangible. My question is, can depreciation be also for intangible aspects? What is depreciation? It is majorly decrease in value over what? Usage. Yes or no? When I'm using something, it has to be what? Mostly tangible. Now, don't come and say, sir, depreciation of emotions. Over a period of time, they decline. How it was in the starting, it is not the same over a period of time. Fantastic, agreed. But मेरे को economy के हिसाब से बताओ. Mostly what? Decline with usage. Decline with usage. So I see depreciation to be majorly present around tangible aspects. Can internet depreciate? Computer? Difference, right? So it is mostly centered around what understandings of tangible depreciation which is seen to be happening. And you know, NDP is what? GDP minus depreciation. NNP is what? GNP minus depreciation. NNP is GNP minus depreciation. Now, one thing that you have to understand regarding NNP is that NNP at factor cost. NNP at factor cost is nothing but national income, right? That is the standard definition. But what has been the present consideration? The present consideration has been NNP at market price. The present consideration is NNP at market price, right? This is the present consideration, but if they ask you what is the meaning of it, what you should stick to? Stick to factor cost. What has been considered today? Market price, right? Just write down some differences here. Factor cost. Factor cost. The total cost of all factors of production. The total cost of all factors of production, comma, price of commodity from the producer's side, price of commodity from the producer's side, and includes the government, and includes the government subsidies, includes the government subsidies. Next, market price. The price at which the product is sold, the price at which the product is sold in the market, it includes the taxes imposed, and excludes the subsidies, Just write down these equations. So we see three things in this. One is basic price, market price, factor price. Basic price, market price, factor price. If you have to look at the relation between all these three, this is what is the equation. Is this clear? I understand all of your alarms will be starting at 8 o'clock, 9:30, 10 o'clock, night, and I understand for most of you it is midnight 6 o'clock. Okay. So kindly I would request that from midnight 6 o'clock change it to early morning 6 o'clock such that your alarms are adjusted. And one simple standing instruction is ensure that you come half an hour before, because you see it is almost full. So you have many people, it's full. You don't have to look back, right? Because it is high impact revision. इतना तो बनता है, ठीक है? So you will have to come early, half an hour at least, so that the checking is done. Ensure that you get your ID cards, right? Don't get some other's ID card and put your photo on that and come, because the frisking is very important at the gate. So ensure that you bring your ID cards and come little early, half an hour, so that we can start class on time. At least by 6:15 we can start, because if you see we have around 6 days for economy, right? And just imagine 30 minutes every day or 15 minutes every day we are going to delay. I'm going to lose around 1.5 hours of it, which technically means we would have to go for one more extra class, right? So ensure that you maintain all of that. Okay. Koncham me alarms, right? Me alarms, me messages, good morning, Ra, all of those. Even if they are coming, ensure that you keep them on silent mode. Okay. So basic price, market price, and factor cost. Okay. So that is the basic difference. Next, personal income. Relax. National income. Undivided profits. Net interest payments. Corporate tax plus transfer benefits. Personal disposable income. Sir, ఇందులో కొత్తదనం ఏముంది? కొత్తదనం ఏమి ఉండదు. All these equations will be same, right? I don't have anything to interpret in these equations, because UPSC has a trend of asking which of the following is composing personal disposable income, and in that it gives every possibility, every rearrangement, and you will have to be very clear what is going on with respect to that. It is personal income minus taxes plus subsidies. Minus taxes plus subsidies. Now, one thing that you have to remember is you would have heard about something called as transfer payments. What are these transfer payments? These are only one-sided. Transfer payments are one-sided. Taxes, two-sided or one-sided? It is also one-sided, where the citizen pays to the Government. Mostly transfer payments is what government is paying to citizens. Right? A classic example of transfer payments is what? Huh? Emma? DBT. The name itself has what? Direct benefit transfer. It's a transfer payment, which is one-sided, and nothing is expected from in return. Okay. So that is one more simple understanding with respect to your equations, right? I'll just write down 2-3 lines, right? General points again under this. First, personal income is part of national income. Personal income is part of national income. But you tell me, is pension a transfer payment?
Yes. Not a transfer.
Is pension a transfer payment?
Yes. No. Yes. Yes.
Huh?
That is two-sided. Initially, the employee pays to the government.
Ah.
Later stages, government is paying to the pension.
Now here when you look at pension, you have two different cases. One is where you are paying some premium and for which again you are getting in return. Now for example, you see you have NPS, new pension scheme. Right, after those who are employed after 2005 into the government services, then you all will come into NPS. What does that mean? You are going to receive how much you save. Is government giving you something free? One-sided? No. You people are talking about what? Those pensions which are dispersed from the side of the government with an objective of welfare. Something like, you see, if those schemes which are mostly under the social security, those are what? Especially in the context of welfare, those are mostly transfer payments. Insurance? No. All the subsidies? No. What about LPG? Is LPG a transfer payment? Please don't confuse. Be very, very clear in transfer payment. What is happening? నీ జోబులో నుంచి నువ్వు పైసా తీయట్లేదు. When you go for party along with your friends, what you do? That only. Then who is paying you the transfer payment? Your friend. There. Here, who is going to pay you? Government. You're not taking out, you're not shelling out any money from your pocket. And when that is being taken care, that is transfer payment. Okay? Please remember that. You will come across one more thing called as a transfer price. Not here. You would see this transfer price when I'm actually dealing with international economics. In international economics, you would see about APS, advanced pricing agreements, right? And you would also see something called as arm's length pricing mechanism, ALPs. In those advanced pricing agreements, especially in international economics, we talk about something called as transfer pricing. We'll discuss when I'm actually discussing about that. And in fact, an extension could also be seen with respect to double taxation avoidance agreements, DTA. Right? We'll discuss all of that when we're discussing international economics. Okay. Right now. So personal income is part of national income which is received by households. Next. Now one more clarity, please give me. Transfer payments is only by the government or somebody else also? Anybody. For example, you see Diwali bonus. What is that? Transfer payment, right? Which means the transfer payment can be from the side of government as well as certain private firms. Don't be confused again. Okay. Next. National disposable income. National disposable income includes net national product at market price, net national product at market price, and other current transfers, and other current transfers, other current transfers from rest of the world, from rest of the world. Next. In general, the sectors of economy include household sector, private sector, government sector, external sector, and financial sector, external sector and financial sector. Right. So this is all with respect to, just write down one more last. Per capita income is the average income of a person, in a particular year, and it is calculated based on national income, per capita income indicates the growth of an economy, but not development of an economy. Growth of an economy, but not development of an economy. Next. Intermediate goods, comma, next point, intermediate goods, comma, capital gains, intermediate goods, comma, capital gains, comma, transfer payments, are excluded from GDP, Next. GDP do not indicate welfare, inequality, comma, environmental damage or degradation, and negative externalities, externalities. Right? So this is about accounting. Next, a very, very important cluster is understanding of supply and demand. See, more or less, if you remember, I was just showing you that application based questions. Yes, in most of the application based questions, we see the concept of supply and demand very well applicable, right? And any damn question in economy which is applied can be solved using supply and demand. All that you will have to weigh is what is more, what is less. And I would anyway tell you what is going to happen if supply is more, if supply is less, if demand is more, if demand is less. Now forget about whether it is currency, forget about whether it is goods, forget about whether it is services, forget about whether it is resources, anything. It is all depending upon whether there is a balance with supply and demand or not, is the question that you will have to address. And most of the times, be very, very clear here. Cause has to result in effect, not effect resulting in the cause. Be very clear. 99% of the economy questions, especially application based, go wrong because most of you will say this is the reason. Be very, very clear in economy questions what is the direction examiner is asking you. And one common observation that we see is most of the times the direction is what? What is the cause? What is the effect? Because you will see this only in two subjects. One is in geography, one is in economy. What is cause? What is effect? Corresponding relation has to be remembered. Okay. Now, in that, first we would start with demand. दो तीन पॉइंट लिख लो, उसके बाद हम कर लेंगे. Write down. Demand depends upon the population, comma price, comma time, comma market, comma income, comma quality. In bracket you can write high impact revision. Don't write that. Comma quality, comma climate, but this doesn't work with tea and coffee. Don't you think so? I think only in India, even during hot summer in the afternoon at 12 o'clock, we'll be having tea and coffee. And uska to kuch exception hai nahi. And all of us can closely relate with that. Yes or no? Manam em chesina cheyakapoyina kachchitanga tea break. Yes or no? Now these tea shop fellows are becoming multi-millionaires. And all the credit should go to all of us, including me. Right? All of us, definitely. Enduku stress. చదివినా చదవకపోయినా యూపీఎస్సీ ఆస్పిరెంట్ ఉండేది ఏంటి? స్ట్రెస్. చదివితే ఒక స్ట్రెస్, చదవకపోతే ఇంకో స్ట్రెస్. రైట్? సో దట్ ఈస్ ఆల్వేస్ కామన్. ఠీక్, రైట్ డౌన్. సో క్లైమేట్, comma government taxation and subsidies, comma savings, comma savings, comma preferences, preferences. Did I say population also? Yes. Comma preferences. And also the nature of goods. And also the nature of goods. Right. In general, one thing that we mostly see is what? One factor which is dominant is with respect to price. The general law says, or general observation is, when price increases, demand decreases. One more observation is, be it an increase or decrease in price, there is no change in demand. Right? This is generally observed to be what? A normal good. This is generally inferior good. Right? Now, one more combination is, irrespective of price rise, we see rise in demand. That's an exception to law of demand. In this, you see there are two kinds of products. One is the luxury, the other one is the non-luxury. Those which are luxury are Veblan goods, and those which are non-luxury are Giffen goods. So always remember, this is definitely against the law of demand. When the price increases, demand is also seen to be increasing. Right? Forget about your academic economics here, my dear. Try applying your general commonsensical economics, things will work out better, especially in the exam hall. Okay? Right? So price increases, demand decreases. Right? Now here, whenever we see there is change in price, there is a corresponding change in demand. We call that as the phenomena of elasticity. And please understand, if you go and refer to the generalization that I dictated, what did I tell you? Anything that is elastic will change. So what are we seeing here? Any change in price will result in change in demand. I am not bothered whether it is positive, whether it is negative, but if it is changing, it is changing. Whenever I see there is change in price, but there is no change in demand, it is inelastic. It is inelastic. And a small change in price result in large change in demand. It becomes super elastic. Right? You see, when a small change in price results in large change in demand, that is super elastic. Right? And most of the times you see this is seen to be with respect to the luxury goods. Most of the times you see that particular trend with respect to luxury goods. Now just imagine, even if 10,000 reduces on iPhone, most of you are ready to buy it. And with the dip in 10,000, you see the demand will increase. A small change will result in large change in demand. Now there is one more factor which is present in the context of demand, that is income. When look at this relation between income and demand, as the income increases, demand increases, very common again. And as the income decreases, demand decreases. As the income increases, demand increases. As the income decreases, demand decreases. Now, how is it affected with respect to population? When I say it with respect to population, when the population increases, demand increases. When the population decreases, demand decreases. And be very, very clear, my assumption is all of the population are considered to be what? Consumers. That's my assumption. All of the population is considered to be what? Consumers. So with that context, what happens whenever I see there is increase in population, I see increase in demand, decrease in population, decrease in demand. Basic assumption. Right? Apart from this aspects, you see the cost of goods. Now when you look at the cost of goods, here goods could be in general two types. Goods could be in general two types. One is the complementary goods. The other one is substitute goods. Complementary goods and substitute goods. Now when I'm talking about complementary goods, right? If I have to have a product, I see the original good and complementary good both have to be present. For example, if I have to have tea, what is going to determine and what is going to matter to me? The cost of milk as well as tea powder as well as sugar. Now when I see that what is happening here, tea powder, your milk and sugar are complementary goods. And in this context, what happens when the price of the complementary goods go up? You see, automatically the price of the product will also go up. And when the price of the product is going up, what will happen to the demand of the product? Reduces. When you see the cost of the complementary good, now just imagine milk becomes costly. Once upon a time, 1 rupee cut chai used to be there. Right? Sir, మీరు అంత పాతకాలం మనిషి కాదు. Right? Now, what is the minimum chai that you drink for? 10 rupees. Yes or no? Where is 1 rupee? Where is 10 rupees? What has happened? All the cost of the complementary goods have increased. Now, don't say, sir, the demand did not reduce. It did not reduce. I already told you in India, everything fails against tea and coffee. Now, what is the new product everything is failing against? Meat. Chicken prices are crossing 300. Doesn't matter. Every day minimum 250 grams to 300 grams. Emanante lean protein antaru. Yes or no? What is the cost of mutton that you see? Around 800,000, near that. But are we reducing the quantities? Impossible. That means what? That is becoming the new exception that you see in the context of law of demand. There's one more product which is like that, which is considered to be sin good. Alcohol and tobacco. Yes or no? Right? Government is imposing something called a sin tax. To what? Increase the price of it such that disincentivize the buying of it. Is it disincentivizing? Definitely no. Even under stress. Right? Mental health. Right? All of that is there taken. So complementary good is what? When I see the cost increases here, the cost of the product increases, automatically the demand of the product decreases. Now when I look at a substitute good, it is always the original versus the substitute. Here what is the symbol that I used? Plus. That means combination, complementary. Here it is what? Versus. That means what is happening? If the price of the substitute goods increases, if I am saying the price of the substitute good is more than the price of the original good, for suppose, what do you automatically see, my dear? The demand for the substitute good reduces and the demand for original good increases. A classic example is tea versus coffee. Coffee is a substitute for tea, tea is a substitute for coffee. And most of us love tea because tea is cheaper than coffee. Yes or no? For coffee, you'll have to spend 20 rupees. For tea, it comes up with 10 rupees. Now we have so many substitutes there, green tea, black coffee. But are we bothered about all of those substitutes? No. Why? Price is higher. When the price of the substitute good is higher than the original good, you see the demand for the substitute good is lesser than the original good. So if I write that equation, the demand for substitute good is less than the demand for original good. Please be very, very clear. If the price of substitute good is increasing, the price of original good will automatically be comparatively lesser. And what is the equation that I told you? When the price increases, what is happening to demand? Decreases. Now don't bring in unnecessary exceptions. Right? Don't bring in unnecessary exceptions. Although I was just joking upon tea, coffee, meat. Don't take it seriously. Not keep it for yourself. This is what economy works like. Where? In real economy or in exam economy? Exam economy. Now the real economy panchayate hotu. I am not writing Indian economic services. What are we writing? Civil services. Right? IPS ochina adjust అయిపోవచ్చు. Right? IAS tarvata. Right? Any of these I's will you can adjust. Okay? Remember this. This is with respect to what? Cost of goods. Now one more thing that you need to understand. I was talking about this concept of elasticity. Settle down, my dear. Elasticity. I was telling you elasticity indicates change. Sometimes you see something called as price elasticity, as I already told you. What does that mean? Change in price results in change in demand. Any change can result in any change. Remember that. When I say any change can result in any change, it means that is elastic. That means it is responding to some dynamism that is existing in that particular phenomenon. Now we have something called as income elasticity. What is income elasticity? I see that when there is change in income, I can also see there is change in demand. There is something like income elasticity. When there is change in income, there is change in demand. Sometimes you would also come across employment elasticity. Sometimes you would also come across employment elasticity. What is employment elasticity? Change in growth resulting in change in employment opportunities. Change in growth resulting in change in employment opportunities. That means, am I seeing really the employment sector changing? You would have heard about the phase of jobless growth in India. There, what was happening? Was it a condition of super elasticity or elasticity or inelastic? Inelastic. Now, when I look at some phase like jobless growth, what is happening there, my dear? Although I see there is large change in GDP, but is there any change in employment? The change in employment is near zero. So, is it a condition of elasticity or an inelastic condition? Inelastic condition. It's a condition of inelasticity. Now, can you tell me which among these sectors of primary, secondary, and tertiary can experience maximum employment elasticity? Manufacturing sector. Fantastic. But what is the problem with Indian manufacturing sector? It has been stagnant. It has been stagnant, and what is the proportion? It is varying between 14 to 16% of GDP. This is what is the proportion of manufacturing. That is why you see what happened in National Manufacturing Policy 2011. What did they envisage? They wanted to make it to 25%. Did we ever touch that? Impossible. Right? We were about to, suddenly COVID comes. And then it falls down up to 9 to 11. Uski beach mein fluctuate ho raha. And that is why you see Make in India, National Monetization Policy, NMP, all asset monetization, all of this was going on. Right? You see Gati Shakti. Is up Q. That is fundamentally somehow at some point to enhance the infrastructure to push for manufacturing. But that has not been happening, right? So majorly you see manufacturing sector can be one potential which can experience employment elasticity. Any other? Any other apart from that, any other sector that you can imagine about? Is agriculture employment elastic? No. Any other sector that you can imagine, which is very practical in the context of India? Is service sector resulting in change in employment? I don't see an employment shift there to a larger extent. Because what is the major issue with service sector? You need skill. Even if you want to run logistics, service sector is not only software, please. Even if you want to run logistics, you need skill. Right? So that is why I don't see much of a change that is happening in the context of employment elasticity with respect to service sector. Can you think about some sector which is elastic in the context of India? Construction sector. What is happening? You would have heard about something called as real estate. Yes, आजकल क्या चल रहा है? We are all looking at rampant increase in construction sector, and automatically what happens? It is absorbing more of manual labor. How much ever technology you have in construction sector, it cannot replace manual labor. Now people are talking about prefabricated walls, all of that prefab that is going on. But don't you think to assemble that also we need some labor? So in that context, you see construction sector is elastic when it comes to employment elasticity. So elasticity deals with what? Elasticity deals with change. Right? So that is one more small understanding, and this is the aspect with respect to demand. Now, one small thing that you have to observe here is the concept of aggregate demand. Now, you would have one universal basic formula: C plus G plus I plus X. That's C plus G plus I plus X. Now, when you look at this, always remember, any question regarding inflation, please bring that question to this equation form. In exam hall, any question regarding inflation, which of the following causes inflation? You bring that to this particular equation and link it with this equation. When you look at C, it is majorly talking about the individual consumption. When you look at C, it is talking about individual consumption. When you look at G, it is talking about government expenditure. When you look at I, it is majorly the private investments or corporate investments, and this is majorly dealing with the international aspects where exports and imports. International aspect with respect to exports and imports. For suppose if they say the global oil prices are increasing, what will happen? Global oil prices are increasing means what happens? Imports increase. Automatically what is happening? AD increases. Right? And I will tell you maybe in tomorrow's class when we start, What is the relation between aggregate demand and inflation? Always remember, inflation is proportional to aggregate demand. If the aggregate demand increases, automatically what is happening to the inflation? Increases. Aggregate demand increases, what is happening to the inflation? Increases, right? Any given day. Now, do not operate here, sir. You told price rise means demand decrease, but now you are telling aggregate demand increase means price rise. This is what I told you. What you should look at? What is the cause? What is the effect? Yes or no? Do not change this to effect to cause. This is wrong. Now here, what is the cause? Aggregate demand. What is the effect? Inflation. Here, what is the cause? Price. What is the effect? Demand. That is why I always told and I'll always keep telling here is with respect to what? Ensure you're looking at the direction of the question. In which direction is it moving? Is it moving from the side of price or is it moving from the side of demand? Do not reverse engineer and do not reverse operate. You're definitely going to get an incorrect answer if you reverse operate, right? Now, when look at each of this, that is consumption expenditure. Here, G, government expenditure. I, private investment, and X. Now, when look at consumption expenditure, you see, if income increases, what is going to happen? Consumption expenditure increases, right? If savings increase, consumption expenditure increases. Now, don't come out and say if expenditure increases, savings decrease. This is the problem that I told you. Look at the direction, which side I am going. Because all of you will use household economics, I understand. But in household economics, what happens? If expenditure increases, what is happening to savings? Am I bothered about from the direction of expenditure or from the direction of savings? Direction of savings. So be very, very clear. Don't operate otherwise. Right? Savings increases. So you also see consumption expenditure increases. Transfer payments increases. Consumption expenditure increases. Subsidies increase. Consumption expenditure increases. Consumption expenditure increases. If inflation increases, what is happening? Expenditure increases. You will have to buy at any cost. No, there are certain essentials. Right? So you see, if inflation increases, what is happening? You also have consumption expenditure increasing. The dimension is there, right? So what is seen to be happening? Income, savings, transfer payment, subsidy, and inflation. Now, when you look at the government expenditure, you tell me one more factor. What is happening if taxation increases? Consumption expenditure will decrease because the disposable income will decrease. The disposable income reduces. When the disposable income reduces, automatically what happens? The consumption expenditure decreases. Now, when look at government expenditure.
Sir, here it can be two ways, taxation.
Why?
Taxation on the products, then consumption expenditure increases.
Why are you thinking so much? My simple understanding is what? I am looking from the side of whom always? Consumer. Because you and me are consumer. Right? Maybe when you get into government, you'll have to look from the side of somebody who is providing. Okay? When you look at government expenditure, you see majorly that is what is dealing with what? aspects of fiscal policy. And in the context of government expenditure, you can see that it can be developmental expenditure and it can be welfare expenditure. It can be developmental expenditure and it can be welfare expenditure. And you also see in the context of government expenditure, it is with respect to taxation, it is with respect to revenue, it is with respect to welfare, it is with respect to taxation, it is with respect to revenue, it is with respect to welfare, it is with respect to again transfer payments, it is again with respect to transfer payments, and more importantly, you see the government expenditure will also depend upon what is the need of economy. What is the need of economy? What is the nature of economy? Now, one small thing that you have to understand here when I'm talking about need and necessity of economy, when you look at this fiscal policy, either it can be cyclical or counter-cyclical. It can be cyclical or counter-cyclical. Now, when I'm talking about this cyclical or counter-cyclical, now if I say that this is the nature of economy, for suppose. Now, when I say this is the nature of economy, that means what is happening, my dear, here what is happening to the economy? Economy is on a growth. And here what is happening? Economy is increasing, or the aspect. When I say economy here, I'm referring to GDP, I'm referring to growth. Right? I'm referring to the factors of growth, or I'm referring to the overall factors of GDP. It is decreasing. In this context, if you see, the government also spends in the similar manner. When I say government spending in the similar manner, that means when there is more growth, if the government expenditure is also increasing. And when there is less growth, if the government expenditure is also decreasing. Such a particular trend is what is called as the cyclical fiscal policy. When I say cyclical fiscal policy, it is fundamentally going along the cycle of the economy. And when I am talking about along the cycle of the economy, I am saying along the cycle of economy here, how is it going? Economy is increasing. So government expenditure is also increasing. Economy is seeing a downtrend. Expenditure is also seeing a downtrend. And such a phenomenon is what is called as cyclical fiscal policy. So cyclical fiscal policy is when it is following the cycle. The cycle of what? Cycle of the economy. Now, what is counter-cyclical? This is counter-cyclical. What is counter-cyclical? The counter-cyclical is very simple. If the growth is seen to be increasing and the government expenditure is seen to be decreasing, or if the growth is seen to be decreasing or the government expenditure is seen to be increasing, this is what? Cyclical or counter-cyclical? Counter-cyclical. That is counter-cyclical. So what is cyclical? When it is following the cycle of the economy. What is counter-cyclical? Opposite. During COVID-19, what was it? Cyclical or counter-cyclical? Counter-cyclical. Fantastic. Counter-cyclical. Now, where is a greater probability of deficits? Counter-cyclical. Where can I see a condition of fiscal imbalances to a larger extent? Counter-cyclical. Counter-cyclical has a threat of fiscal imbalances and fiscal profligacy, we say. I'll tell you, when I'm discussing fiscal policy, we'll talk what is fiscal stimuli, what is fiscal profligacy, what is fiscal discipline, right? What is fiscal trilemma, we'll see, don't worry. But otherwise, what is it dealing? What is cyclical? If it is following the cycle, counter-cyclical, opposite. Right? So that is with respect to what? Government expenditure. Other two sections we'll do tomorrow, right? Is this clear? So that kindly see now, one definite source which you should not leave for economy is 12th class macroeconomics NCERT. That is the most underrated source, but every year UPSC gives you 5 questions at least from that. Ensure that you read 12th class macroeconomics textbook, right? Usme wherever you find the graphs, you leave that. You only read the content, don't talk about what is happening, don't remember any equation in that particular book, conceptually read it. Is this clear? Right? And my humble request is kindly reset and ensure your sleep cycle is correct. Class kochi nidrapoku. Right? Pandaga time lo baga nidrapoyaru. There is no point in coming to class at 6 o'clock and sleeping. Rather better sleep on your bed comfortably. Right? So ensure that you're resetting things like this and arranging things like this and ensure that you're on time. Right? Because you'll have to come half an hour. What is happening? Why will it decrease? No, will you consume only something which is given subsidy upon? Can you consume anything else also? Now you're getting subsidy on fertilizer, does that mean you will have lesser expenditure on meat? No. It is one condition where if I'm getting lesser or if I'm having fertilizer subsidy, don't you think I'm going to save more money? And when I'm saving more money, what is going to happen? Consumption expenditure will automatically increase. Right? Somebody is asking cost of goods. Substitute to complementary. What is substitute? Versus. Right? X versus Y. What is mostly preferred? Something which is cheap. Yes or no? If the price of X is high, what would general demand prefer? Y. That is substitute. What is complementary? It is nothing to do with versus, it is combination. Classic example of tea, coffee, easiest example to understand. So complementary good, if the price increases, what is happening to the price of the product? Increases. If the substitute good price increases, what is happening to the demand of the substitute good? Decreases. Demand of the original good increases. Be very clear with that operation. 2021 we had question, 2020 we had questions, 2016 we had question, right? Complementary good and substitute good, right? We'll meet tomorrow. Thank you.